Hi everyone, this is AmyKilcoyne at Keller Williams, and I hope everyone is staying healthy and sane during this COVID-19 shutdown. I wanted to give an update on the forbearance program information that I put out about 2 weeks ago. If you haven't seen that video, I will link it here. Just some updates and some clarification regarding mortgage forbearance. So this is a letter that came out from Fannie Mae yesterday. I am going to reference it in the video because I can't memorize everything. I'm going to kind of tell you what they're telling us here on this letter and then kind of translate it so it makes sense as we move forward, because sometimes we read it and then we don't really understand what I'm going to tell you in plain English what they're talking about. So in the last video we talked about forbearance, how you can have your payments suspended. And then there was a lot of backlash saying, okay, they're suspended, but yet they're saying that once the forbearance program is over, that the payments are due in like a lump sum. So that definitely is true. However, keep watching because there's more to the story. So some of the changes that they put in place regarding COVID-19 forbearance program, I would say one of them is reporting to the credit bureau. So that's one of those changes that they made. Basically, they're saying in the response to the CARES Act that was put out, they are acknowledging that service providers, that's the mortgage companies that you pay your mortgage to, must report the status of the mortgage loan to credit bureaus in accordance with the Fair Credit Reporting Act. This is including amended by the CARES Act for borrowers affected by COVID-19 emergencies. So that's changing what they put out on the 18th that said that they were not going to report anything to the credit bureaus. So if you are in an active forbearance program or repayment plan or trial plan where the borrower is making required payments as agreed, even though the payments are past due, as long as they are not delinquent and related to the hardship resulting from COVID-19. There is going to be some kind of reporting on who's in. If you are in a forbearance program, the mortgage company must inform you as the borrower that payments that are subject to forbearance plan have been only delayed or reduced, not forgiven, and that once the forbearance program is completed, the following must occur. 1. The loan must be brought to current through reinstatement. The borrower is approved for another workout option. Sounds like they're lifting weights. They want to work it out. The mortgage loan is paid in full, or the servicer, that's the mortgage company, refers the mortgage loan to a foreclosure in accordance with applicable laws. So definitely don't want to do any of these options except work out another option, because obviously if you're on forbearance, the chances of you having all the payments and escrow and principal and interest to pay right magically back when the forbearance period is over is, I would say, pretty slim to none. So obviously, and if you want to pay the mortgage in full, that's an option for you. So that's fantastic news. So if you can't pay, the mortgage going forward, just pay it all at once. Just pay off that house. It's totally fine. Obviously, if you're going to sell the house, then that would be paying off the mortgage in full if you can't write a check. So, and then obviously we want to avoid the foreclosure option. So the best option for everyone would be the borrower is approved for another workout option. What does that mean? I know. I'll tell you more. Don't worry. So this is kind of the changes that they've made just yesterday, April 8th. For borrowers who have received forbearance plans in response to COVID-19, the servicer, which is the mortgage company, must begin attempts to contact the borrower no later than 30 days prior to the expiration date of their forbearance plan term. And they must continue to reach out until they reach someone that is obviously on the mortgage. Okay, so what they're going to do, they're reaching out to determine the reason for the delinquency and whether it is temporary or permanent in nature, to determine whether the borrower has the ability to repay the loan, and educate the borrower on the available workout options as appropriate. Another workout option. I'm looking forward to that. Obtain a commitment from the borrower to resolve the delinquency. Okay, so basically, this is the workout. They're talking here about finding more workout options. Now, Fannie Mae already had a disaster relief program put in place, and that was primarily set by FEMA-related areas. So if FEMA determined that the area was a disaster area and the property and mortgage was in those areas, then you could do this extended modification program. So they made the change that it now includes COVID-19. So the borrower must have experienced a hardship resulting from COVID-19. For example, unemployment, reduction in work hours, illness of the borrower or co-borrower or family or dependent family members, which have impacted their ability to make their monthly mortgage loan payments. So they have a note here right under that sentence that says the servicer, mortgage company, is not required to obtain documentation of the borrower's hardship. But yet they just said that the borrower must have experienced a hardship. So I would interpret that to say that Fannie Mae is not requiring the service providers to provide this information, yet they will be looking for that information. So you have to show that you had a reduction or illness or something. There must be some kind of documentation to make sure you're qualifying for this modification program. So it says mortgage loans must have been current or less than 31 days delinquent as of March 13, 2020, the date of the national emergency declaration related to COVID-19. So if you had mortgage troubles in February and your payment was already over 30 days late, you will not qualify for this modification under this disaster relief efforts. Basically, it's a two-step program. Once you get in forbearance, as your forbearance is becoming due or over, I should say, you need to go back to the mortgage company and work out a loan modification program. So that's like a two-step process. They're pretty much approving everyone to be in forbearance, and then the outcome of that is going to be coming later. I hope you found this video helpful. As more information becomes available, I will be giving updates. This is not my favorite topic to talk about because it is an unfortunate situation economically for everyone, but I want everyone to kind of get the information and help that they need, and I'm happy to facilitate that and help in any way I can to keep people informed about what's going on in the market and their options for them. So if you have a friend or family member that needs to hear this information, please feel free to send it to them, and if you have any questions, I'll be happy to try to figure things out with you. Hopefully the hold times aren't too long. I'm finding that they are from the people that have been keeping in touch and updating me, but hang in there, and hopefully everyone is safe and staying sane during these crazy times. That's the only way I can describe them. So thanks for watching. Bye.